Welcome to a journey through the minds of some of the most legendary traders, investors, and psychologists. This isn't just a video, it's a mindset shift. Today we break down 20 powerful quotes that reveal the core of trading psychology. Not anonymous fluff, but battle-tested wisdom. Quotes that have guided billionaires, shaped hedge funds, and saved traders from self-destruction. Prepare to slow down, absorb, reflect, and evolve. Because your edge in the markets isn't your strategy, it's your psychology. Mark Douglas, the author of Trading in the Zone, cuts right to the essence. The consistency you seek is in your mind, not in the markets. Markets are inherently inconsistent, full of randomness, noise, and chaos. Yet consistent profitability is possible. How? Because consistency comes from you, your mindset, your discipline, your emotional regulation. Most traders think the problem is the market. Wrong indicator, wrong time frame, wrong news. But the truth is, they lack internal consistency. You need to execute a good trade not just once, but over and over again without emotional interference. You must follow your rules in drawdowns, in sideways markets, in uncertainty. Douglas teaches us that if your mental game is solid, your outcomes will follow. The chaos doesn't matter when your discipline is unshakable. Tudor Jones, a billionaire hedge fund manager, puts it bluntly. The most important rule of trading is to play great defense, not great offense. In other words, surviving matters more than thriving. While most traders chase the next big win, Jones focuses on not blowing up. Great offense may give you a few lucky trades, but great defense keeps you in the game for years. Defense means respecting stop losses, position sizing appropriately, walking away from revenge trades, saying no when the setup isn't perfect. You don't win this game by trying to hit every pitch, you win by not striking out. Even Tudor Jones, with all his wealth, still lives by strict risk management. If he can respect defense, so can we. Dr. Brett Steenbarger, a trading psychologist and performance coach to top hedge funds, reveals a painful truth. Your trading psychology is a reflection of your life psychology. If you lack discipline in your daily habits, health, focus, relationships, it will bleed into your trading. If you're reactive in life, you'll overtrade in markets. If you fear failure in life, you'll avoid taking good trades. Steenbarger says you can't compartmentalize your personality. You trade the way you live. That means improving your trading requires self-awareness, personal growth, and accountability outside the charts. This isn't just trading advice, it's life advice. If you want to master the market, start by mastering yourself. Jesse Livermore, the legendary trader of the early 20th century, famously said, "The game taught me the game, and it didn't spare me the rod while teaching." Trading isn't something you master by reading. It's a brutal, unforgiving arena where you learn through experience, especially painful ones. Livermore made and lost fortunes multiple times. Every loss was a lesson. Every drawdown exposed a flaw. There's no substitute for screen time, emotional exposure, and learning through doing. When you lose, the market isn't punishing you, it's teaching you. Ray Dalio, the founder of Bridgewater Associates, simplifies growth into a formula. Pain plus reflection equals progress. Everyone feels pain in trading, but few reflect. Most rush into the next trade, hoping to erase the emotional wound. Dalio says stop, feel the pain, analyze it, reflect. Ask, why did I take that trade? What emotion drove it? What did I ignore? Only when you combine the sting of pain with the clarity of reflection do you build real wisdom. That's how you stop repeating mistakes. That's how you grow stronger. Pain alone just hurts. Pain plus reflection changes you. Ed Seykota, a pioneer in systems trading, hammers the point home. The elements of good trading are 1. Cutting losses, 2. Cutting losses, and 3. Cutting losses. Why the repetition? Because it's the single most violated rule in trading. When a trade goes against you, ego often steps in. We rationalize, we hope, we hold, but Seykota reminds us, cut the loss, immediately, without hesitation. Good traders aren't those who avoid losses. They're the ones who refuse to let a small loss grow, Respect your stop. It's not just a number, it's your protection. Van Tharp, one of the most respected trading psychologists, delivers a profound truth. You don't trade the markets, you trade your beliefs about the markets. Every trader sees the same chart, yet they interpret it differently. Why? Because we trade based on our filters, our beliefs, our biases, our emotional histories. If you believe the market is a trap, you'll be hesitant and fearful. If you believe it's an opportunity, you'll act decisively. Changing your results means changing your internal beliefs. What you believe about risk, reward, and probability directly affects your decisions. George Soros, one of the most successful hedge fund managers in history, states clearly, "It's not whether you're right or wrong, but how much money you make when you're right and how much you lose when you're wrong." Traders often obsess over being right, but Soros focuses on asymmetry, risk-reward. You can be wrong 60% of the time and still make money if your winners are large and your losers are small. It's not about ego, it's about math. Forget win rate, focus on edge, on protecting your downside and letting upside flourish. Dr. Alexander Elder, psychiatrist and trading mentor, shares this insight. The goal of a successful trader is to make the best trades. Money is secondary. Great traders don't chase money, they chase excellence. Every trade is a decision, and that decision should be based on logic, not greed. Focus on process, follow your setup, execute with precision. When your goal is to trade well, the money follows naturally. But if money is your only target, you'll compromise discipline, and that's when losses mount. Excellence first, profits later. Tom Basso, a trend-following legend, reminds us, "I feel my job is to make the trades as boring as possible." Boring doesn't mean ineffective, it means stable, repeatable, unemotional. When trading becomes exciting, you're likely taking on too much risk, breaking your rules, or chasing the market. Professional trading is routine. You follow a process. You let the edge work over time. If it's thrilling, it's probably wrong. If it's boring, it's probably profitable. Nicholas Darvis, a self-made millionaire trader, kept it simple. "I believe in analysis and not forecasting." Forecasting is the trap of the ego. You want to be right about where the market is going. But Darvis focused instead on reacting to price action, not predicting it. He analyzed volume and price to follow strength, not to forecast reversals. This is a key shift in trading psychology, from needing to be right to needing to respond well. Good trading is reactive, not predictive. It's not about calling tops or bottoms. It's about managing risk and following momentum. Richard Dennis, the legendary founder of the Turtle Traders, breaks the illusion. You're not trading against the market, you're trading against yourself. The market is neutral. It doesn't care about you. It's not out to get you. But your reactions, fear, hope, overconfidence, those are your real opponents. Trading is a mirror. It shows you who you are under pressure. Mastering yourself means detaching from outcomes, controlling impulses, staying humble in wins and losses. The best traders don't beat the market. They beat their own psychology. Economist John Maynard Keynes warns, "Markets can remain irrational longer than you can remain solvent." Just because something should happen doesn't mean it will happen. You may be fundamentally right, but the market may take weeks or months to catch up. Traders who hold losing positions, convinced the market is wrong, often go broke waiting. This quote is a reminder. Manage risk as if the market is always right, because your survival depends on it. The goal isn't to be right, it's to stay in the game. Steve Burns, trader and author, hits a nerve. Your trading account is the scoreboard of your discipline. Your balance isn't just numbers. It's a reflection of how consistently you stick to your rules. Did you chase a trade? You'll see it. Did you size too big? It shows. Did you follow your plan? The P&L tells you. Discipline is the bridge between strategy and results. You can't fake it. The scoreboard is always on. Veteran trader Peter Brandt speaks from decades of experience. Most traders would rather be right than make money. Ego wants to be right, but trading isn't about being right. It's about managing probabilities. You can be wrong often and still be profitable if you manage risk. But many traders hold on to losing positions to prove they were right. Let go of ego. Let go of needing to win every time. Focus on long-term profitability, not short-term validation. Nobel laureate Daniel Kahneman, co-author of Thinking Fast and Slow, uncovered a core human bias. Losses loom larger than gains. We feel the pain of loss more deeply than the joy of gain. This leads to destructive behaviors in trading. Cutting winners early, letting losers run, over-trading after loss to get even. Kahneman's work teaches us that we're wired against good trading. Awareness is step one. Building systems and habits that counteract this bias is step two. William Eckhart, partner of Richard Dennis, says bluntly, "The desire to maximize the number of winning trades is one of the most destructive habits of a trader." Win rate obsession leads to avoiding necessary stop losses, taking tiny profits, ignoring asymmetric risk-reward. A high win rate can be an illusion of safety. What matters is expectancy, how much you make on average per trade. Accept losses. Focus on edge, not ego. Linda Roschke, professional trader for over 30 years, offers timeless wisdom. Trade small and stay in the game. New traders often go big, hoping to get rich fast. But longevity matters more. Small position sizes. Reduce emotional stress, help you stick to your plan. Allow for growth through learning. Roschke's message: survive first, thrive later. Tom Hogarth, a mindset-focused trader, tells the truth. You don't need more trades, you need more patience. More trades ease more risk, more fees, more emotional exposure. Patience means waiting for A-plus setups, sitting through drawdowns without panic, letting winners run. In a world of instant gratification, patience is your edge. Jack Schwager, author of the Market Wizard series, ends our list with this insight. Amateurs go broke by taking large losses. Professionals go broke by taking small profits. Cutting losses is step one, but step two is letting profits actually grow. If you cut your winners too early, your risk-reward collapses. True professionals know you must give your winners space to develop. Don't be afraid of drawdowns within profitable trades. Manage the trade, don't suffocate it. These quotes aren't just words, they're mirrors. They reflect the deepest truths about what it takes to succeed in trading. If you want to win in the markets, you must win within yourself. Revisit these quotes, reflect, build systems, master your mindset. Because as every great trader knows, psychology is not part of the game, it is the game. Like, comment, and subscribe for more deep trading content. Share your favorite quote in the comments below. Stay disciplined, stay humble, trade strong.